Hello, traders. Gary Wagner with the Gold Forecast. It is Friday, as we say in Honolulu, Hawaii. Happy Aloha Friday. It is September 10th. This is the daily report, our weekend review. Very, very interesting day in the market. We'll be talking about the recovery that we saw, but gold has closed in the Forex for the weekend at 1245.60. Traders, this is not your typical gold market. We have seen some incredibly interesting activity. Of course, as you know, we did initiate a small long position, 1255, stops 1205. I'm keeping them really, really loose. Reason is I have been expecting a pullback, and I felt that if we got the pullback, I want to have plenty of ammunition on the bottom, cost average, 2 to 1, 3 to 1 is actually what I would recommend. However, here's what we got. We got after we got this doji, we got a classic black candle, and this 3-day pattern, of course, is a 3-river evening star. It's a very, very strong indicator if you get confirming information on the following candle, meaning a follow through of the sell-off on the following day. We absolutely did not get that. As a matter of fact, as you can see, I've got our Fibonacci numbers up here. Our 23% retracement takes us to 1238. The market, as you can see quite adequately, did dip below there, but buying came into the market, that buying the dip mentality, and pushed the market back up. Now, right now, what we're looking at, as far as I'm concerned, is the fact that although gold prices are due for some type of profit-taking pullback, the long-term uptrend remains intact. And I believe, depending on the fundamental information we get next week, we've got a lot of economic data coming out, that we could see gold poised to break through those record highs. That's my opinion anyways. Now, the one thing that I do want to take note of as I was looking at these charts the other day, and that is if we take a look at this record top right in here, when the market actually hit that 1265 and then broke back down. The interesting thing is we did get a long black candle, but following that long black candle, we got this doji-like. Actually, we got 2 days of doji-like indicators, and then the market came down. Now, what I'm finding interesting is that when we go back and then look at the area that we're currently trading in, which is right here, we do have this doji right in here, which is similar to this doji right in here. Does that mean history will repeat itself? Well, I don't know, but I can tell you that this is one of the most unique markets I've seen, in that where I expect pullbacks, we simply aren't seeing them. Fundamentally, the market seems to be much too strong to want to trade down. They sold it off hard in New York only to have it being bought up once it hit overseas, and every time we get New York pushing it down, we get the Asian markets coming in and buying that market back up. Now, I could be proved wrong next week, traders, don't get me wrong. But as of now, the way that I look at this market is that when we see this profit taking, what we are witnessing is that the market itself has these very, very small pullbacks. And in fact, these types of areas that we're witnessing in here, let me blow this up for us, traders. They are coming to our Fibonacci numbers. In other words, we did get the market trade to this low here and come right off it. So have we actually witnessed the pullback? Typically, I would have to say no. Now, here's what we want to realize. Next week, we have a cornucopia, let's say, of U.S. economic reports. And depending on how those reports come out, what the data says, I think that that's going to be a impetus to the direction short term in gold. Long term, I'm a fundamental bull, as you know. I've already stated and put myself on record saying I'm looking for 13 and a quarter. I'm also looking for 14 to 1500 over the next 2 to 3 years. But we've got a lot of data coming out. Manufacturing data in form of the Empire State Index, the Philadelphia Federal Reserve Index, and the Producer and Consumer Price Index. Those are reports which will measure inflation. Those are going to be released next week. And we want to see how that economic data turns out, because if in fact those reports come out better than expected, we might then have the impetus to see gold pull back and get the healthy retracement that I'm looking for. I want to be able to complete wave 1. I want to weather wave 2, and I want to go in hand over fist in wave 3 and start accumulating large positions in gold, because I believe wave 3 is the wave that could excel and propel us to the 1300. However, with what we have seen recently, we might see it go for these record highs next week, all in wave 1. Now, one other thing that I think is absolutely worth noting and paying some very serious attention to is our weekly charts. Our weekly charts, of course, are not charts we can trade off of, but they tend to give us a longer term picture. They allow us to kind of pull back from the market itself and see a little bit bigger of a picture. And you get significant signals in this market. For example, this Three River Evening Star, this hammer down here. And as you notice, this market right now has propelled itself straight up. We have had a series of 1, 2, 3, 4, 5 weeks in a row with higher closes until we got to this week. And lo and behold, on a weekly chart, we have our doji. Again, this doji is an indication that the market is consolidating. It typically, in a normal market, indicated the point in which power shifted between the bulls and the bears. We have not witnessed typical activity in the market. However, we simply need to pay attention to this, because if on the following week we get any kind of an indication of a lower close, meaning it opens on Monday and closes lower on Friday, we would then get a black candle. And once we got a black candle, that would give us our Three River Evening Star again. Let me just draw that in for us. It'd be something like this. So on a weekly chart, that would indicate a potential top here also. We will have to wait and see. As I said, traders, this is not your normal market. My recommendations, obviously, we're going to be maintaining our long position in at 1255. The reason that I wanted to put such a mild position on is that it's truly my belief that the market's going to retrace. If it doesn't, we have the beginning of a base position we can add on. And my philosophy behind that is that whether market goes up or down, we're going to be adding to this position. Traders, most interesting week, of course. We will see what happens throughout next week. And I truly believe that over the next couple of weeks, we are going to witness a new price, historical new price in gold. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Sunday. Bye-bye.